Hello everyone, good day and welcome to Air Education. In this video, I will share with you the chapter 4 of our lesson in the fundamentals of accounting, which is about the forms of business organization. So before we start, I will just give you a little background of how this business started with regards to our topic. So do you know what kind of brand is this? I know that most of you have this kind of shoes and you are using this for sports purposes, for leisure purposes, and so on. So most of us have these shoes as our favorite brand. So this shoe is known as Nike, or their tagline, just do it. So Nike actually started in the year 1964, but with the name Blue Ribbon Sports. So Blue Ribbon Sports is actually started by Bill Bowerman, a track and field coach at the University of Oregon, together with his former student, Phil Knight, and they first opened this as a retail store. So Blue Ribbon Sports is a retail store which they buy and sell shoes from the other manufacturers so that their colleagues in um, the sports that they have can use the shoe that they are selling. Apparently, as time went by, they realized the need of the athletes to use shoes. That's why they opened or launched their first manufacturing shoe, which they named as Nike in 1972. So, meaning from a retail industry, they started as a retail industry, they now became the manufacturer of this shoe. So, it is partnered again between Bill Bowerman and Phil Knight. Okay, so there are two people involved in this business. So this time, we are going to learn the different forms of business organization if a person establish his business as a sole proprietor, or he has partners, or he opened it to many investors as corporation, or it is a business where there are a group of individuals who have the same interest to be or to establish this kind of business. Okay, now let's start with the first one. Again, this is sole proprietorship. Sole proprietorship is a business that is owned by one individual for the practice of trade or profession or other purpose. Meaning, this business is owned only by one person. That's why it is called sole. From the word itself, sole, again, this is owned by only one individual. Sometimes those people who are engaging with sole proprietorship are in the practice of their profession. For example, dentists or other medical practitioners, they have their own clinics, or those skilled individuals such as barbers, tailors, and etc. So sometimes to practice what they know in their field of profession or skills, they establish their own business. And since this is established by one individual, it is considered as the simplest form of business organization. Aside from that, once we register the business, it will be registered under the owner's name, since he is the only one who operates and established the business. And in fact, he is the only one who puts all the investment for the business. Next, it can be sued it can sue, sorry. So this is just a typographical error. It can sue and be sued under the owner's name. So in case the owner has a liability to pay for their creditors or other outside parties, so he can be sued under, of course, his name. So there's no one to be blamed in the business aside from the owner. Likewise, he or she can also sue an individual who uh, practice something that is not legal to the business. Okay, so he can also sue anyone under his name. And lastly, again, this is the sample of a sole proprietorship business. So small retail stores, especially yes, the sari stores, and the professionals who have their own office for a CPA, lawyer, physician, etc. Right? So, what are the different advantages and disadvantages of sole proprietorship? So, since this is owned by only one individual, he or she has full control of operations. He can decide whether or not he will hire people. He can decide what kind of outlook will be like for his or her own business. So everything is up to him. Next, it's easy to start and easy to dissolve because since you are the only one who manage it, only few paper requirements are needed to start this kind of business and same with how it is being dissolved. And this is the good thing that most people wanted. That's why they established a sole proprietorship. It's because all of their profits go directly under their name. So they are benefited by their own fruits. Owners can mix personal and business assets. Sometimes, especially in the sari store, if you have your own personal refrigerator, so you can just pull it out inside your home and put it in the business, right? Next, less regulations because we only follow few since we are just a small business. So we follow regulations mandated by the DTI for the pricing, the Bureau of Internal Revenue for the filing of taxes of uh, our business, the income tax, and even the employees' benefits. So as simple as that. And simple taxation since it's just a small business. And here are the disadvantages of sole proprietorship. Unlimited liability. So if you are the only one who benefited from the profit of the business, of course, you will also be the one who will take the consequences in paying the liabilities of the business. So if the business owes money, even for from a bank, from any financial institution, so the owner is the one liable to pay those liability. Next, limited life. Why limited life? So since you are the owner, the business is registered under your name. In case the business, in case the owner, rather, in case the owner unexpectedly had an accident or dies, that's the worst thing that could happen. So, in short, there's no existing owner who can manage the business since you are the only one registered under that business. Okay? And next, difficulty in raising capital unless you are really ready to enter the business. If not, of course, in case of uncertainties, just like what we are experiencing these days, if you would observe most businesses shut down because of the pandemic, The reason behind that is because the cash flow of the business is very unstable. There are no customers entering, so in short, the owner has no capacity to pay the employees and to sustain the needs of the business because every month, of course, a business has its obligations to pay, like utilities, the water, electricity, and other things under that. Or for the others that are renting their space, they need to pay their rent every month. So most of the businesses during the pandemic, especially during the start of the pandemic, have have shut it down because of that. Okay. And lastly, owner's bias. Since you are the only one who can decide for the business, sometimes it's always in favor of you. Okay? Uh, there are common times where you can consider inputs from the other people because yeah, why not? Because you're the owner of the business, so why follow others, right? So that is a disadvantage of a sole proprietorship. Next is partnership. So partnership, according to the Civil Code of the Philippines, Title 9 of the Civil Code, according to the Partnership Code of the Philippines, I'm sorry, Title 9 of the Civil Code of the Philippines, partnership is a contract whereby two or more persons bind themselves to contribute either money, property, industry to a common fund with the intention of dividing the profits among themselves. So, uh, it is understood that when you enter partnership, it is not just you have other people with you. It's either your brother, your friend, a family member, as long as you contributed either money, again, money, property, or industry to make it as a common fund of the business, you are already considered as the partner of the business. Okay, next. Many small businesses and most professional service groups are partnerships. So, for example, I am a lawyer, but I do not have the capacity to pay for my office. So I need an investor to help me out establish my own business. So my friend who is financially capable, and me, who is a skilled individual, who is a professional, we can bind ourselves together to establish a clinic. For example, I am a doctor, to establish a clinic where I can practice my profession from the fund given to me by my friend, again, who is a financially capable individual. So it can be like that. Okay? But again, since you are binded in this partnership, you should have a so-called memorandum of agreement or um, an article of partnership. Okay? And money is not the only resource. Again, you can have money, property, or industry. The purpose of having a memorandum of agreement and articles of partnership is to uh, know what are the duties and responsibilities of each partner since you have different contribution in the business and how you can divide the profits and losses of the business. So it is very, very important to have a written agreement, a black and white agreement regarding that. Okay? And there you go. Again, it is binded by partnership. agreement. So anything that you can contribute just to enter a business, it is possible as long as you have the articles of partnership. All right? Now, these are the advantages and disadvantages of sole proprietorship. First, um, the potentials from two or more individuals are increased because they shared different strengths. Again, if the person one is financially capable, the person two is skilled, and the person three has knowledge to manage the business. So, those partners are capable to establish the business because they can bind their strengths all together. Okay. And next one, easy to form with proper agreements on its formulation. Unlike sole proprietorship, because sole proprietorship is very easy to establish. Partnership is somehow easy, but not very easy because since you are binded with articles of partnership, you need to register to the Securities and Exchange Commission because to strengthen that partnership, you need to register the business to SEC. Okay? Still, less regulations compared to corporations, but there is an additional regulations to be followed since another government agency is attached to your business. And the disadvantage of partnership or the disadvantages of partnership are as follows. First, you have unlimited liability of one or all owners. Again, if the agreement relies only on the financial or the financer of the business, so that financer is the only one liable for uh, any financial dispute in the business. Apparently, if there is an agreement written that in case the business incurred losses, debts, all of the members shall pay for that. So it's up to the partners. Again, that's why it is referred as there is only uh, one or either all owners uh, could obtain unlimited liability. And next, it also has limited life because if one of the partners decided to let go the business, so the partnership between the three of you will be dissolved. So it can no longer be the partner of three people because one of the members quit in the business. So it is no longer called partnership. Okay. Next, high possibility of dispute and conflicts between partners. All right. Next, since it is the other impact since you share different strengths. Sometimes when there are two or more people sharing ideas, that's the start where they can argue, where the miscommunication can start, and of course, conflicts may arise. So we have here other forms of partnership. So first one, general partnership. So the advantages of general partnership, it is simple and inexpensive to create. So general partnership has primarily the members of this partnership have equal contribution to start the business. So that's why it is simple and inexpensive to create. So the disadvantage of this is uh, the owners are personally liable for the business debt since you have decided to equally contribute for the business. So you are personally liable for business debts. Okay? Next one, limited liability partnership. So when we say limited liability partnership, limited partners have limited personal liability for business debts as long as they do not participate in the management. For example, um, there are 10 members of the partnership. Five among them are industrialists. When we say industrialists, it's either they contribute their knowledge and skills in the business or their properties in the business. And the general partners or the financiers are also five. So it depends upon the agreement of the partners if only those financiers are liable for business debts, and the limited partners are those individuals who only shared their industrial experience. Okay? Or um, those partners who share their industrial experience doesn't involve themselves in the management. So only those people in the management who shared different skills and contribution in the partnership are only liable for the business. Right? Next, general partners can raise cash without involving outside investors in the management of business. So, since general partners can include those people who contribute property and money in the business, so they can easily raise cash because there are two or more people helping themselves to survive the business. Next, the disadvantages. General partners personally liable for business debts since they are the one who contribute financially in the business. So of course they will be personally liable for business debts or they are part of the management. So any decisions made by the management is also a liability of those people inside the management. More expensive to create than regular partnership since it involves many people in the business. Of course, it is very expensive. Suitable mainly for companies that invest in real estate. Those only companies who invest in real estate, for example, an apartment. So maybe my contribution in is the land, the other one is the materials, the other one is the labor. So it is only suited for those kind of business. Mainly, meaning it can be part of the other kind of business, but mainly in real estate. Next, limited partnership. So this is actually similar to limited liability partnership. And mostly of interest here are the professionals with a specialization in law, medicine, and accounting. And only those owners um, or the other owners of the business who are not practicing their profession cannot be personally liable for the malpractice of the other partners. So, for example, again, um, as the financier of the dental clinic of my friend, in case that she omitted or committed rather, she committed malpractice on her uh profession, I will not be personally liable for that because I was not the one who uh practiced that um unwanted part in the business. Okay? Next, the disadvantages of limited partnership. Owners or partners are personally liable for business debts. Again, same with the limited liability. Of course, more expensive to create and again, suited only for real estate business. However, the last part, limited liability partnership. So this is somehow different with the limited liability partnership because this involves companies to companies partnering together. Okay? And the owners have limited personal liability for business debts even if they participate in the management because it is the company itself who will be liable for business debts. Kasi it is between companies by companies. Okay? And since this is between companies and companies, or this is between companies, it is more expensive to create than regular partnership. Right? Now, let's move forward to the largest form of business organization, which is known as the corporation. So, corporation is defined as an artificial being created by operations of law, having the right of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. Meaning, since this is a separate legal entity, the owners will not be liable for any debts and investments or for any debts rather for any debts in the business. It will be the company itself because this is a standalone business. He or the company can survive as long as it has a continuous flow of cash flows. And it is required to have 5 to 15 incorporators. When we say incorporators, they are the investors in the business. So these are the advantages and disadvantages of corporation. First, advantages. More sources of funds because you are composed of 5 to 15 incorporators. So you have a lot of source for the funds. Easy to transfer ownership because in case let's say for example the SM when Henry C died, SM is still there, okay? Because the ownership of the business can easily be transferred to those people who are capable to manage the business. So since his family members are capable of doing so, or they are also the one who have the largest investment in the business, so they can still manage, or they can still own, or they can be referred as the new owner of CSM. Okay, next one. Liability of owners is limited again because the company is a standalone business, so the company can pay its own liability. And it has unlimited commercial life. So actually, a corporation can live up to 50 years of existence and it is renewable. So even though the person who started the business died or um, leave the business, sell the business to anybody, it's still operating because it has unlimited commercial life unless everybody declares bankruptcy or the company itself declares bankruptcy. Okay? Next, the disadvantages of corporation. Of course, since you are involving a lot or a tons of money in the business from your 5 to 15 incorporators, more regulations to be followed. This is to ensure that all members of the partnership or the company or all the incorporators in the business are protected by the law. And since this is a very large business, it is costly to incorporate. Double taxation as well because profits is taxed at the corporate tax rate and shareholders as well are taxed when they receive their dividends. Okay? The dividends are the profits of shareholders. holders. So that is the terminology for the profits being received by the shareholders. Again, that is dividend. So these are the other features of corporation. First, again, it has a separate legal existence. It has many government regulations to follow. It has dividends and it has a corporation management. So this is the example of the management structure of a corporation. So from the stockholders are actually the owners of the business. That this is what I am trying to portray with you on our lesson in the chapter 3, which is about the users of financial information, because I myself is a stockholder of a certain business. So I felt that I am already the owner, although I only own a portion of shares of the company. So those are the stockholders. Under the stockholders, of course, are people who manage the business and part of the so-called board of directors. Chairman of the board of directors, and under that is the president or CEO. And under the president and CEO, there are different unit heads. We have the executive secretary, excuse me, we have here the executive secretary, VP for marketing, VP for finance, VP for operations, and VP for human resource. Since businesses primarily aims to earn profits, so there are different areas under the VP for finance, a treasurer and a controller. A controller sometimes are the one who budgets the money. Treasurer are the ones who collects the money from the business. So here we are now in the last part of our discussion, the cooperatives. So cooperatives, according to the Cooperative Code of the Philippines, it is a duly registered association of persons with a common bond of interest who have voluntarily joined together to achieve a lawful common social or economic end. In short, all those people with common interests, just like farmers, teachers, policemen, anyone who have common interests to uh, establish a business is called cooperatives. And also, it is good to take note that all members of the cooperative have equitable contributions to the capital requirement and accepting as well a fair share of the risk and benefits of the undertaking in accordance with the universally accepted cooperative principles. So these are the other features of cooperatives. So since it is owned by the members of the cooperatives, it can sue and be sued under its own name, not the members of the cooperatives, but under the name of the business. It can be formed by at least 15 persons. So if you have friends or association created under any circumstances, so you can create cooperative. It has the right of succession as well. So in case the founder of this cooperative left the business, dies unexpectedly, or any other reasons for not being part of the cooperative, it can be passed along to the members. Okay? Members are subject to limited liability. So why they are subject to limited liability? Because only those who manage the business are personally liable in case there are business debts, or it is the corporation or the cooperative itself. And just like corporation is, it shall exist for a period of not exceeding. This is not actually similar to corporation because corporation has 50 years of life existence and renewable, but cooperatives could not exceed 50 years of existence. I'm sorry. It is similar rather to corporation because the same with them, they can establish their business for 50 years and can extend for another 50 years. Okay, they could not extend for 50 years without renewing, but upon renewal, they can extend for 50 years. And just like corporation, it has a set of board of directors. And income is called net surplus that belongs to the members. So whoever the members are of the so-called cooperative, so all incomes are shared between the members. It depends upon the tenure or the capital contribution in the business. So what are the different advantages of cooperatives? So first, it has unlimited life and a democratic organization. Since everyone again has a common share of interest, so it is a democratic organization. The disadvantages of this one, difficulty in obtaining capital through members because sometimes members of the cooperatives only become a member because they just want to be benefited from the perks of the cooperatives, for example, the discounts of the products and so on. And sometimes because some cooperatives has a mandated contribution every month. For example, you are obliged to contribute 100 pesos every month, so every member should do that. And sometimes it has a disadvantage of having the members not cooperating or not participating in the business just because maybe some of them just want to contribute financially. Okay, so these are the different examples or types of cooperatives that I am sharing with you because again, this is a group of people who shared common interest. For example, advocacy cooperative, agrarian reform cooperative, consumer cooperative, cooperative banks, credit cooperative, dairy cooperative, education cooperative, electric cooperative, financial service cooperative, fishermen, health services, housing, insurance, marketing, multi-purpose, producers, service, transport, workers, and so on. Okay, so as long as they have that common share of interest, they can form a cooperative. So these are just samples of those cooperatives. Okay, so I hope you learned a lot from this lesson. I have here a little classwork that you need to do as part of compliance and to measure your understanding with the topic. Again, our topic here is the forms of business organization. So as part of this chapter requirement, I want everybody to record a 3 to 5 minutes video doing a mini play about different features or advantages and disadvantages of the discussion that we did from the different business forms. You can do this play at the comfort of your home using the materials available. So be resourceful, be creative to do the play. Okay? You don't have to go outside to do this. Just stay at home, just be creative. In case the members of your household do not want to participate in this one, it's okay. So you can do the doble cara. You can portray the manager. You can also portray the employee. Just change your outfit uh, in order for you to execute this video. Again, this is just to measure your understanding on the different forms of business organization. So you can use different software applications just to do this. So it's up to you. Once you're done doing this, you can share the link of your output in the Google Classroom. You don't have to upload the whole video that you have, just the link. Upload the video on your Google Drive, share the link to anyone, and submit that link on our Google Classroom. So this is not updated because I used this presentation on my previous classes. Okay, so I will upload this on the Google Classroom, this classwork, and see the deadline updated there. Okay, so if you have questions, you can message me directly on our group chat. Happy learning! So this is the scoring rubrics, video content. 5, the student has a high level of understanding in the topic. Creativity. 3, the student can use creative tools in video editing and is resourceful in executing the activity. And lastly, originality. The student displays uniqueness in the content of his or her video. So these are our references for this topic. So again, thank you so much for listening and have a great day.